Welcome to Money Talk with Michael. I'm Michael Eastham, president of Fellowship Financial Group. Money Talk with Michael is our weekly broadcast where we answer your questions about finance, investment, retirement, and all things related to money. Remember to send in your questions to the email listed in the description box below, and you might hear your question answered on the next Money Talk with Michael.
I'm 70 years old and retired this year. I just started Social Security on my 70th birthday, and my wife started hers as well. She's 67. Our combined Social Security is just over $3,500 a month, and I have a small pension at around $500 a month. I know that every little bit helps, but we really need another $800 to $1,000 a month to make ends meet. We did manage to pay off our mortgage last year, and our home is worth about $200,000, and we have a savings of $120,000. How can we get this done?
Thanks so much for that question. Another great one. First of all, congratulations on paying the mortgage off on your house. That is a fantastic life milestone for a lot of people, and I'm sure you're glad that it's gone. Now, your situation is a classic case of where the gap of income needs to be filled. If you need an additional $800 to $1,000 a month from your $120,000, that's a little bit aggressive in terms of predictable interest and dividends that you're likely going to be able to take without taking a lot of risk. So again, in an ideal world, what you want to do is position that $120,000 in a place where you can at least generate some interest and dividends from it. But the problem here is that to be conservative with that money, it's only going to get you maybe about halfway there, maybe a little bit more, but about halfway to the $1,000 or so that you need to get in order to fill that income gap. What you might want to consider is that if you plan to live in the house for the rest of your life, and that's an ideal place for you, then you may want to consider filling the remainder of the gap with a reverse mortgage. I know reverse mortgages have some history behind them, and there's a lot of bad press out there in some cases, but in the right situation, it can be a great solution, and it sounds like it may be able to fill the gap in your personal situation. So, in a combination of the interest and dividends from your savings, the $120,000, that's a great place to start, because the last thing you want to do is spend down principal too soon. If you fill the rest of the gap with possibly a reverse mortgage, and there's lots of flexibility, different types that you could use, then I think between the two of those things, then you're going to have a reasonable expectation of not running out of income before you run out of life. Thanks so much for that question. Thanks so much for watching. Tune in next Monday for another edition of Money Talk with Michael. And don't forget to send in your questions and check out our website at fellowshipfinancial.com and our social media platforms. And if you'd like, you can schedule a 15-minute complimentary call to get your specific questions answered. Everything you need is listed in the description box below.